All right. Hello, everyone. Welcome to, I think this is episode 88 of Going Live with Good Soil. Every Tuesday, the same time, same place. Matt and I are doing these live streams of the weekly kind of financial news and Tesla news. It used to be mostly like all Tesla stuff. And then over time, and on some other stocks we cover. And over time, it's evolved into a lot of macro news. Instead of like 5 or 10 minutes of macro, today we'll probably spend, half the show or more on the macro stuff. So yeah, we're live on Twitter Spaces and our YouTube channel at the same time. It's recorded for anyone who wants to listen later. Sometimes listening to us at 1.5 speed is more efficient use of your time than normal speeds. That's what I find. So, Matt, how are you doing? A lot to talk about today, right?
Yeah, we do have a full plate. The Silicon Valley Bank saga was, really like a rapidly progressing story over the weekend and into early this week. And then we had CPI this morning too. So a lot to get into. Full disclosure, I probably only slept like 2 hours last night. My kids are all sick and my wife. So if I'm a little bit out of it, that's the reason why. But I'll
Yeah.
pull through as much as I can. Had a good amount of coffee this morning.
Okay, Matt, you're gonna love getting sleep again one day. It's just hopefully it's around the corner for you. Yeah.
Yeah, it seems like we're going backwards on that front. So yeah, eventually I know it'll turn, but my
Yeah.
youngest is a year, and I'm like, I feel like we shouldn't be having these issues right now. But
Yeah, by the time he's 2 years old, hopefully you'll be out of the worst of it. I guess time will. You got 6 kids, so one of them's probably always having nightmares or sick, keeping you guys up.
yeah, yeah,
So first, let's headline. The first thing is the February CPI. It came in about as expected, I think, right? 0.4 month over month and 0.5 month over month, right, for the core CPI and the consumer CPI, I guess. So, what were your thoughts on that, Matt?
yeah. I mean, it was the market certainly digested it as good information. I think the most telling thing for me is that 70% of the increase in the CPI number was actually related to the shelter, which we've talked about many times on here. How the shelter component of CPI, one, is just a very large component of the overall CPI index, but two, it's got it's incredibly lagging as an
Mm,
indicator. We've talked about the OER, the owner's equivalent rent, how that is a lagging figure that kind of averages in over 12 months or so. So I think that the kind of increase that we saw, which accounts for 70% of the number, is really related to what happened in months past. So
hmm
it's a little frustrating, I think, to where people are still going to be talking about, oh, the actual number is so high, like it should be close to zero or like 0.1% on a monthly basis. And the fact that it's not, may look bad. And I've seen some commentators even say the Fed clearly has work still to go because look at this, it's still sticky. But I think when you look at what's actually driving it, this will very clearly reverse itself at some point once the data kind of stops being so laggy or starts getting onto better comps. So I don't know. Those were kind of my thoughts. What did you think of the numbers, Emmett?
Yeah, I didn't have a chance to dive into them this morning as much as you. I basically am digesting the market's digestion of it, and like you said, the numbers came in sort of as expected. I think that helps the markets because the Fed can be less conflicted when they are gonna. I think keep rates the same in this upcoming meeting, because if the CPI was hotter than expected, like again, or surprisingly hot, then it would be very conflicting for the Fed to decide what to do here in the midst of this quasi systemic banking risk crisis and inflation hotter than expected. What do they do then, right? So we'll talk about that in a second. What the Fed we think is going to do, but let's move on to kind of the Silicon Valley Bank saga, right? I mean, everyone's been digesting it. Everyone's been talking. It's been all the news of podcasts and Twitter. Now, first thing I wanted to say is in our notes yesterday we were talking about. I know this is one of the questions we'd come up with. What do you think would happen? Twitter is the best place for up to date info. What do you think would have happened with the Silicon Valley banking crisis, and how do you think this could have played out if there was no Twitter and no like daily or weekly podcast? It was just like the normal mainstream media news cycles going on. do you think this would have been different, or how do you think this would have played out?
Yeah, this is, kind of interesting. It was something when you and I were talking yesterday, Emmett, in our normal weekly meeting. I was telling you how I was trying to get updates on this, and I was like checking Wall Street Journal and New York Times, and like all their stories were about what happened the day prior at best.
Yeah.
So then like you go on Twitter and it's like by far the best information, like up to the minute, everything that Yellen is saying, and so it was just kind of eye-opening to me to see something like this, which was so important for markets, and to just see how bad the traditional outlets are as like a timely purveyor of information. But I think that also this kind of new age that we're in, we were talking about this yesterday, also kind of plays into like Fed policy. We're not the only ones that are privy to like the rapid rate of information. So, the All In podcast had a fantastic episode that dropped, I think it was Saturday morning. And they essentially said something has to be done before the markets open on Sunday. And if not, like all hell is going to break loose.
Yeah.
And I think a lot of people were echoing that. I mean, that was certainly my view as well. And we can dig into the why if it makes sense in a little
and
bit.
Bill Ackman and other
mhm.
financial people on Twitter having like spaces with 20,000 people listening. I'm sure some of those people are connected to influence or like policymakers and such. Yeah, but go on.
Yeah. So, I'm just thinking back to '08 is the best proxy for this situation, right? Where, you had
Yes.
the Lehman failed and there was, at that time, like it was very clear that the federal government needed to step in to kind of stem systemic risk. My memory of that is a little bit hazy, but I'm almost positive that they didn't move anywhere near as quickly as they did in this instance. And so I think it's actually been a good thing to kind of like reinforce, like it seemed like there was pretty widespread consensus, at least among people who knew what they were talking about, that like you can wipe out the equity holders, the investors. That's completely fine and probably appropriate. But you can't wipe out the creditors because you'll lose faith in the whole banking system. And so the fact that they were able to, pull this off with only like, I think Friday afternoon is like the only wires that were impacted out of Silicon Valley Bank. And then by Monday morning, everyone had their full deposits available. And so like that speed of reaction, I think all the podcasts and everything did play a role in kind of pushing the speed that the government acted in.
Yeah, absolutely. I think if there was no Twitter and no like daily, weekly podcasts that are widely being distributed, I think if it was just left up to the mainstream media, it would be late, like you said, even a few days late. And the markets would be crashing a lot more yesterday and even today. And there'd be like an emergency, cut of rates and like backstop announced tonight or something. It would be like a midweek crash of 10% of the market. I think it would have been much worse potentially. Like all the regional banks would basically have gone under by now instead of just the top, the three of them so far. So I think the fact that you have Twitter on the flip side, it also encourages, faster information dissemination for bank runs to happen, and I think that's okay. That's a stress test. That's a stress test that should be warranted on every bank. I mean, every bank should be prepared for a potential. There's people calling for like, oh, anyone who's talking about bank runs should be looked at by the FBI or SEC or something like that. And I think that's,
oh, really? I haven't seen much of that. Like bank runs.
Yeah, there's been some calls for that, or not conspiracy. Like anyone who's talked of potential bank runs or encouraged it on social media should be, looked at closely by the SEC or something like that. Like as if like, we should be policing our speech about the, possibility of a bank going under and you need to just get your money out. Like, I don't know how it seems like it's just the censorship kind of creeps back in there. And I'm like, I don't think that's the right tactic to use, is like try to tell people not to yell fire in a movie theater that's actually on fire, possibly, so,
and that's such an interesting point, because if the bank is fine, then they should have all the liquidity needed to handle, a run. Now, it can cause permanent damage. I mean, we've seen First Republic, which did not have nearly the kind of issues that Silicon Valley Bank has, and their stock is down. I didn't check this morning, but as of yesterday, they were down 75% or so in a week. And I'm sure deposits are flying out of there like crazy too. Now they've got I think they handled the situation a lot better, and it doesn't seem like they had nearly the level of systemic risk that Silicon Valley Bank had. But like, I think it's prudent. Like you shouldn't. if there actually are issues, then people should be trying to get their money out. I mean, that's just the only natural thing to do. And the other thing, which we haven't talked about yet, is in this environment where if you've got, say, $1 million just sitting in the bank, and treasuries are short-term treasuries are offering, 3-4% interest.
5%.
Why
Yeah.
5% interest? Why would you be sitting earning, 25 bips on your, savings account on a million? Like,
Yeah.
that's just kind of dumb cash management. So I think
Yeah.
people shouldn't be leaving large sums of money that they don't need, kind of above and beyond their working capital levels that they need to just kind of pay their bills on a monthly basis. Anything above that, they really should be managing, and it
Yeah.
shouldn't be sitting in a bank.
Yeah. I mean, there's a lot of people just asleep at the wheel with their cash balances in their bank, people that are just not even following the financial markets remotely, whether it's like small business owners or a wealthy family that's just living their life in other ways, whatever. Like, they're probably just letting their cash sit there, assuming they're getting what they're supposed to be getting, and their bank's kind of running away with it. So, I mean, ultimately, the Fed rate hikes up to what's happened, it's finally like, it's finally broken something, right? I mean, everyone knew sooner or later the Fed can't just raise hikes infinitely. At some point, it's going to break something, right? I mean, whether the
Mhm.
Fed raises, imagine if the Fed raised interest rates to 50%, 50. Imagine, I mean, how much would that break? It would break like so many things, right? So we're at 5% or 6%, whatever, and it's breaking things. Okay, so I think the Fed understands this, and now with these banks going under, and you could say the regulators were asleep at the wheel, like the FDIC. I have a friend, that used to work there, and I was talking to him briefly, and he was just saying, like, and I listened to an interesting segment on Bloomberg Radio this morning by a guy talking about it. But the regulators at the FDIC, they're conflicted agents. They're kind of like wussies, because this.
Wussies.
Well, they're not. Not only are they probably not the most. Some of them are probably competent, but some of them aren't, because they don't pay very well. You have to be there for
Yeah.
X amount of years before you get a good payout, and if you're not there for most good people leave within a year or two or something. So they don't have a lot of they don't have a lot of great people sticking around. But more importantly, I think there's like competition from other regulators. So from what I understand is the FDIC is like the regulator of some of these regional banks. But if the FDIC is getting a little tough on them or asking them too much of them, then the banks will threaten the FDIC and say, I'm not going to use you as my regulator. I'm just going to go to the Federal Reserve, or there's some other regulators they can use apparently instead of the FDIC. I didn't know that, but like the big banks don't use the FDIC. I think they use like they use another regulator that covers them from a regulatory perspective. So the FDIC has to sort of placate these regional banks in some way, and so they're conflicted in some ways in that respect. So
Hmm.
it's not a perfect system by any means. And so I think you can tell, because now there's this huge loophole that's been exposed of the held to maturity securities, which is, mortgage-backed securities is a big part of that, or these long dated treasuries. And, that's the crux of the issue right now, we think, right? I mean, these held, quote unquote, held to maturity securities, which are not being marked to market. It's ridiculous,
Yeah.
right? I mean, that's
Which
the crux of the
I
issue
would
here.
love just a little 1-minute rant on how stupid this, these accounting rules are.
Yeah.
We've talked about the accounting rules as it relates to Tesla. I think most people are like, remember the whole Bitcoin debacle, like, oh, Bitcoin's going to get marked down, and so that's going to hurt Tesla's earnings in whatever it was, Q2 of last year and Q3, I think it was, there were these impairments. And so, the accounting rules for crypto and for several other assets are that, you kind of hold them at book value, but then if they go down below the value that you bought them at, then you mark them down. But you can never
Mhm.
mark them back up, which is
Yeah.
kind of silly. It's like, these are very
Yeah.
liquid assets. It's very easy to just mark them to market all the time. If you own
Yeah.
equities on your balance sheet, you always mark those to market, whether it's up or down, which is something that
Yeah.
Warren Buffett complains about because it creates these wild swings. But treasuries, for whatever reason, the accounting rules, even though all three of these asset classes are completely liquid and you could very easily mark them to market, the treasuries just stay on the book value, stay on the balance sheet at your acquisition cost. So, these 10-year treasuries that Silicon Valley Bank was holding when interest rates were, 2%, got crushed as the Fed jacked up rates. And so, their actual their fair value was significantly lower than their book value. And so to
Yeah.
me, it's like why are these three different asset classes treated differently from an accounting perspective? It makes zero sense. And so I think some accounting reform among how these are related on the balance sheet is very much due. I think. I think there's no point when you have liquid assets, why not just mark them all to market every single month? It's otherwise you
Yeah.
get like hidden issues like this that people have to go
Or
and like
every
roll
day
around in
when
the
you can.
10Q for. Yeah,
Yeah. I
yeah,
mean, these are trading every day somewhere on the market. I mean, they're liquid that enough. So yeah, I think they need to be marked to market, and that just makes complete sense. I don't know why they wouldn't be. And what's crazy is even though they're trading for 75 cents on the dollar, if you held them to maturity, you're going to get the full, amount back, or what, the bond's going to pay back, the
yeah,
full amount. But because interest rates have gone up so much, they're actually trading now at like 75 cents to the dollar, because, getting
yeah,
2% bond, coupons, instead you could get like 6% or 7% coupons on these MBS mortgage-backed securities, for example, on new ones, so, or treasuries, you can get 5% instead of 2% or whatever. So they're trading on 75 cents on the dollar, but they can still borrow like against 100% of the value. They don't borrow against 75%. And that's also the crux of the issue. And so these inside the balance sheet of these, and the thing is, it's not like one person is in charge of the entire Silicon Valley balance sheet.
yeah,
You have compartments. You have one person in charge of, handling, the coupon payment receivements expected, for another person in charge of this, another person in charge of, and they're all within their own little tunnels, and they don't really, there's not very good cohesion of all of them coming together to understand the big picture until something like this happens. Then people put the pieces of the puzzle together, like, oh, we all maximized our own job, and now we have, this big blow
yeah.
up.
I mean, I would say like a large bank like Silicon Valley should have had better risk management. I mean,
Yeah.
it's even though you're right, there are kind of separate departments that are managing this. The CFO ultimately has, overall responsibility for kind of ensuring that their balance sheet is robust in a variety of situations. And it was not an unforeseeable outcome that you might have rising interest rates. And so they kind of they very clearly had duration mismatch between their deposits and these treasuries, so they ended up having to offload them at a significant loss to book value, which created this funding gap that they had.
Mm-hmm.
So it's you're right, but I also think it's not like the Fed is the only issue here. Like they very clearly could have managed their risk better than they did.
Yeah. Yeah, no, they could have. And I saw on Twitter over the weekend that like their global risk management officer left the firm at the end of last year, and they haven't replaced that position since or something. So
Jeez.
that's not a good situation. Yeah. Yeah.
No,
Maybe they
no,
left because they saw the writing on the wall and like, I'm getting out of here before things blow up. Who knows? Yeah. And then there's reports of like the CEO and the CFO selling stock in the last few weeks before this all happened. So
yeah,
that
and
doesn't
wasn't the
look good
CFO
either.
like in Lehman in '07 too? I think.
Lehman, yeah, like the CFO was like the head of Lehman. There's all kinds of weird connections people are making. You know, that's all on the fringe. I don't know how much of that is legitimately concerning or just coincidental. I don't know, but things to keep an eye on for sure. Um, but the other banks, the Silicon Valley Bank is not the only one doing this. I can almost guarantee. Like we went to a conference with capital allocators like a year. I've been to a number of these financial conferences when I was at my previous role in sales at Interactive Brokers. Mostly for like other things, but there's conferences for regional banks to go to and talk to each other.
Yeah.
The risk management people or the people operating. And I guess I can almost guarantee they're sharing their quote unquote secret sauce of like maximizing the return of their balance sheet. And others have been doing the same thing, maybe not quite as aggressively as Silicon Valley in combination with their venture debt portfolio that, we'll talk about in a second. But I'm sure other regional banks have been doing the same thing, and their held to maturities are really hurt and bad, and they're going to be exposed shortly. And, I think there's rumors of not only like other regional banks going down soon, but even Credit Suisse. If Credit Suisse defaults and goes down, like that would be massive. That's like a huge
Yeah.
global investment wealth management bank, entity, does a lot of things. So, this is not done. This is this systemic. This is sort of a quasi systemic risk. I say quasi because I don't think it affects the quote unquote too big to fail banks so much, because they've been so much more, they've had such huger capital ratios imposed on them. They're so much more better capitalized, supposedly.
Yeah.
But the stocks, you can see the stock market hasn't, shorts stocks haven't lost faith in JP Morgan or banks like that,
Yeah.
So I think it's more the regional banks, and I guess Credit Suisse has maybe something similar or different going on, but yeah,
Yeah, I mean, they also, I think um like the downside risk with the JP Morgans of the world is that like they're in the too big to fail category. So if something like
hmm
this happened, the government would 100% step in to
yeah,
prevent contagion. And so that's like where you've got a kind of this two-tiered system, which is a little bit unfortunate because a lot of the depositors that are, Fleeing, Silicon Valley Bank and the smaller regional banks, they're going to these, like top four banks, Bank of America, JP Morgan, a couple others. And it's like you're kind of putting all your eggs in the same
Wells Fargo and
basket.
Citibank, yeah, Wells Fargo. I
Yeah.
think those other two. Maybe there's one more, but anyway, go
Yeah,
on.
maybe
Yeah,
Bank of America, I think is pretty
yeah,
large. So,
yeah,
um, yeah, it's like we're kind of concentrating again, and I think there is some benefit to having like smaller regional banks instead of just like this oligopoly of like a few big winners. But it
yeah,
seems like that's, at least for the U.S. financial system, kind of the track that we're on for concentrating power.
yeah,
It's kind of unfortunate because I think we said it's like the same issue that we had in '07, '08. I think you just had like these banks that kind of knew there's somebody had this phrase for it, that there's this implied put that like the government will never let the banks like go below a certain level because they'll just step in and bail them out. And so
yeah.
that was like a trade that worked out really well during the financial crisis.
Yeah, yeah, I remember that. And I mean, I guess the one thing is like, what if the federal government's like defaulting on the U.S. dollar at the same in a major crisis, and it can't. It actually, for whatever reason, will not prop up a too big to fail bank. There could be some foreseen issue, like everyone assuming the too big to fail banks will always be saved. I think it's an assumption, and assumptions can
Yeah.
sometimes be wrong. So you just never know. You just always need to be on top of where you keep your assets. Kind of, it seems like the best option right now, the too big to fail banks. I love Interactive Brokers personally, how they manage their risk,
Hmm.
and how they manage their balance sheet. But,
Yeah.
it's
Petterfy
something that
doesn't play
always
these
stands.
games.
No, it's mostly his wealth and his own, yeah, so he doesn't play these games. That's right.
The other thing, which has kind of surprised me. I mean, I got a lot more bearish on crypto in general as an asset class over the last year or so, just with all the scams and like just like
Yeah.
outright fraud that occurred in the
Yeah.
space. But if
Yeah.
you look at like the actual decentralized chains, like Bitcoin and Ethereum, um, like there have been margin calls on those, and a lot of people have just been wiped out automatically. But like the chain keeps on moving, and it's actually proven very robust to wild swings up and down. So my view on crypto has actually improved a little bit when you just compare what those one or two main chains are able to do in terms of like automatically liquidating collateral and just very orderly processing these swings up and down, compared to banking. Whether you're looking at big banks, small banks, regional banks, it's all based on this like fractional reserve uh, system where they're taking your deposits and then loaning them out. So they're introducing some amount of risk in order to generate a higher return, in
hmm
order to pay their bills and get a little bit of income. So I do think that there's a systemic difference there that I'm thinking actually makes crypto look, at least Ethereum and Bitcoin, look a little bit better by comparison, at least
Yeah.
better than I thought they were maybe 6 months ago.
The decentralization aspect seems to, show strength here in these times, I feel like.
Yep.
Um,
I
so
think
I
we're a
mean,
long way from mainstream there, but it's
well,
I think it
yeah,
could go well.
yeah, it's good insurance. I still think of Bitcoin as sort of like insurance to the entire fiat system, and the government fiat system. Um, so, I mean, I guess we should move on a little bit. And the Fed, what are they going to do next? I mean, the metaphor I think of is like, there's this metaphor called the fool in the shower. I think Milton Friedman coined that term, and it's sort of like, if you go into like an old shower and you turn it on at first, and you turn it all the way up, and you go in, and you just kind of, you don't really understand how it works, but you go in, it's like freezing, and you turn it all the way up and it's freezing, it takes a long time, and you're like, and then it gets super hot after a while, and you're like, whoa, and you turn it all the way down, and then you're like still hot, so you keep turning it more down, and you don't realize it takes a while to take effect, and you just keep going back and forth, flip-flopping, because you never quite realize that there's a delayed reaction to this stuff, and
Mhm.
sort of like that's sort of what the Fed it does with interest rates going up and down. And I guess what I would add to this metaphor with what's going on right now is the Fed has been turning up the shower all the way with interest rates. How fast it's turn up the shower really fast, not understanding that the cold water takes a little while to get warm. And in the midst of it getting warm here, there's pipes are rattling now and they're leaking. And so I was like, oh crap, the pipes are rattling. I better stop turning it up. And that's basically like Silicon Valley, Signature Bank, and Silvergate, going bust. And they realize if they keep turning it up, then maybe the whole pipe could explode, and the whole, the plumbing, this old plumbing, that the system would be all screwed up. And so I think that's why the Fed is going to really quickly, if not pivot to cut rates, will just pause, because what's the downside if the Fed raises rates 25 basis points? I mean, they were expected to raise like 50 basis points. And then most people are saying, 25, like it's like a 70% chance or 60% chance it's going to be 25. I don't even think 25 basis points. Like, what's the downside? You got to think about the personal incentives of Powell and the Fed, right? If Powell raises the rates 25 basis points, the upside is, okay, look, I'm fighting inflation still, just not as strongly as I otherwise would have, given what's going on. But it looks like it's like marginally helps a tiny bit, maybe inflation fighting just 25 more basis points. That's a tiny bit compared to where we're at now. But if they raise it 20, what's the worst that happens if they raise it 25 basis? If they raise it 25 basis points and then the next banking collapses start happening like within the weeks after that, and it's also more held to maturities like interest rate just on the fringe, things going bust, then it looks terrible to Powell. Powell and the Fed, they look like they totally don't understand the plumbing of the U.S. financial system. And they let the systemic risk run rampant by raising the rates even further. So I think they are afraid. They will cover their ass and be afraid of that scenario, and for that reason pause, if not lower rates. But I think they'll probably pause. And I think Goldman Sachs put out a note they expect them to pause. Nomura put out a note saying they expect them, and we talked about this other week, like you don't follow just one, these are all anecdotal, but Goldman Sachs is like, they're always usually, they seem to be right more than wrong. Nomura's also in that group, but a lot of investment banks think they're still going to raise 25 basis points. The Fed futures think they're going to raise 25 basis points by like 60% probability or something. But, I think they're going to pause or even lower rates if a few more banks fail between now and next week when they have their meeting. What are your thoughts on this, Matt?
Yeah, I mean, you teed it up perfectly, Emmet. I mean, it's just this almost gives them like the perfect excuse to stop their behavior. I mean, it was not even a week ago, last Wednesday, Powell was testifying before Congress, and he basically said that he didn't see any systemic risk to the economy or to the banking sector based on their rate hikes. Well, like that story lost credibility on Thursday and like completely fell apart on Friday, where, as pretty much a direct result of the aggressive rate hike policy, 3 banks failed. So like that alone, I think can be reason to pause, if nothing else. Gary Black was, he sent a message, I think, that like the SEC very clear, or not the SEC, the Fed cares like 1,000 times more about like the banking sector than they do about like stock prices. So like as the market crashed, like they don't really care that much. But if like the plumbing of America's like financial payment system starts failing and is at risk as a result of their actions, that's like a massive red flag, way more than, like falling asset, like stock prices are.
Yeah. And no Fed chairman wants to be, on the, on the job when that happens. That's like the ultimate failure. If you're the Fed chairman on the job, when the banking system fails, and that's like, you'll go down in history books as like the worst Fed chairman ever.
You would much rather have like 5% inflation for another year than to have that, right? Like, so when you're weighing your options, it's like, all right, like, there's a greater evil here, and that's that the entire banking system fails. So I think I personally think a pause would be like fantastic news. I'm not sure. I'm kind of leaning more towards 25 basis points, to be honest with you, but it wouldn't surprise me at all if they just pause at the next meeting, which if you asked me a week ago, I'd say that there's like a less than 1% chance that that they would pause. So
Yeah, yeah.
this is either way, I think it's really good news, and this may give them the kind of perfect off ramp to kind of change behavior. And I was texting you over the weekend that this whole Silicon Valley Bank, failure may actually be like the best possible thing for equities in a kind of roundabout way, because it may prompt like
And
a
Tesla
changing of
stock,
behavior,
which we'll
and
get to
Tesla too.
shortly. Yeah.
Which, I mean, and just as an anecdote for maybe people who aren't watching this as closely, last week when we were talking, the 10-year Treasury was just under 4%. I mean, it was like 3.97% or so. Now it's down to 3.615%, which is like the lowest level it's been since February, like a month, I guess. But it did that in like 2 days time.
Yeah.
So if you're using that as a risk-free rate to price growth assets, and then having that drop 40 bips has a pretty big impact on valuation for growth stocks. And so if that trend continues where the 10-year keeps inching down, then that's very good news.
Yeah. And what's also, I mean, the data point, like you said, is he in their statements previously, the Fed statements is like they don't see systemic risk. Well, they can't put that statement in their
Right.
Fed language anymore. So you have to assume they're going to take that statement out, which is a big statement. They're going to actually reverse it. Instead of they don't see systemic risk, they're going to have to reverse it and say we see possibility for systemic risk. And if they're putting that
Yeah.
statement in their Fed statement, how can they also be raising rates at the same time? In my view,
Yeah.
I don't think that's
It's
possible. If anything, they're going to lower rates, but I think they keep it the same. But I think they should lower it really. But they'll probably
it's
keep it
gone
the same.
the way of transitory inflation. Like that's just like that statement has lost all credibility, right?
Yes,
It's
yeah.
there is
Something
systemic risk now.
changed. They have to acknowledge it, and it's not only like like they have to accept the new reality of social media, calling them out if they make a mistake as well, like real time, like with the information, like we were talking about earlier. Like they would not have reacted so quickly, we think, if the Twitter was not a thing, if daily, weekly updated news podcasting wasn't a thing. They probably would not have reacted as quickly as they did by putting this all in place Sunday before the Asian markets opened and everything. So I think they know they're in a new age. Not only can bank runs happen much quicker, but they're also going to be held closer to accountability on following what's really going on, because everyone's getting real-time information on this stuff and spreading it much quicker than the mainstream media normally has in the past, which has had a couple of days lag on everything in the past, right? So yeah, this is, I think, good news for if you own equities, and especially if you own growth stocks. I mean, they've been hit so hard with interest rates going up. The discount rate, which is what's used to value a lot of growth stocks, has been hurting us all greatly. And we talk a lot about growth stocks. The stocks we all invest in are, we don't talk about buying GM or Caterpillar. We talk about buying the stocks of what we think are the stocks of the future, which are considered the growth stocks. And so with interest rates coming down, we should hopefully see a nice positive bounce in a lot of these. None of this is investment advice, but this rally today that we're seeing, the Nasdaq is up 2%. It feels like the most muted rally. I don't know, the sentiment I've gotten this morning from watching the news, and even last night listening to lots of interviews of different people, the news, this guy Mike Wilson, who everyone thinks is like some special guy at Morgan Stanley. I don't even know who this guy Mike Wilson. I just see his name quoted on every financial news. Have you heard his name? Morgan Stanley, like global head of investing. I
No,
don't know what
I
he is,
haven't.
but he's being quoted on CNBC, Bloomberg, all the mainstream financial news pieces I listen to, just to get an idea of what the sentiment is in the mainstream financial news media. But he's always quoted, he's like, sell on any, you should sell. The bear market lows are not in yet. Any strength in stocks you should sell, like blah, blah, blah. So the sentiment, what I'm getting at is the sentiment does not feel, it feels like the most muted or the worst it has for a rally I've ever seen. Like we're up 2%
Yeah.
today, but everyone thinks, it's feeling like half the people still think the sky is falling, and like the market's about to hit new lows, So I feel like that's a
Yeah.
great time to be long in a way. Like when the markets are going up and everyone thinks they're about to crash again, and everyone's convinced it's about to crash again, that's the time you want to be contrarian, in my view. I don't know. I just feels like wrong, but right. It's
Yeah.
just one of those times going against the grain.
I mean, just like as an anecdote, look at Rocket Lab and Lemonade. Now there was a little bit of concern because Rocket Lab had money at Silicon Valley Bank, but like those concerns are completely ameliorated with the FDIC stepping in and the Treasury stepping in on Sunday night. But like since this whole thing has happened and the Treasury rate, dropped 40 basis points, like I said, like these stocks are still down over the past 5 day, period, which
Yeah.
makes zero sense in my mind. Tesla and Roblox have rallied, but like the rally, like you said, it's like the most muted rally, which
Yeah.
for something as seismic as I think this really is, like to me, this is like a very clear pivot point
Yeah.
in Fed policy.
Yeah.
Like, of course, can CPI remain sticky and, can things get worse? Of course. But to me, it's like this seems like an inflection point where we're not in the same world this week that we were in last week.
Yeah. I agree. I mean, it just seems the perfect, none of this is investment advice. That's the disclaimer we put at the start of the YouTube channel. We should mention that verbally on the start of these spaces as well, because people don't see the disclaimer visually like they do on the YouTube channel. But it just feels like, yeah, when the market is rebounding, when it's had its lows and it's going to rebound, no one knows it. Everyone thinks the market's going to go
Yeah.
lower, whether it was COVID. Think about all the past crashes, like no one thinks the market's about to go up, X percent when you look back historically when those things happen. It's usually, and the opposite is true too. When people think the market's going to keep going up to new highs, that's when it crashes, so it just feels like one of those times. So I hope it's the right time. Next week, if the Fed was to keep rates flat, even if it stays the same way, let's say if still 60% chance the Fed futures think they're going to raise 25 basis points, but then they come out and they say we're going to keep rates flat for at least the next, until the next meeting, just to see what happens. I think the market could react very violently on the upside, and all the shorts are covering. It could be like I saw some metrics by Spot Gamma that it's like the most put buying yesterday and today than they've seen like ever in a long time or something on single stocks.
Really, put buying.
Yeah,
That's
put
surprising.
buying. So all these puts are gonna, expire, and the gamma, they'll all like fade or decay, and
that would make sense if like some folks like us are thinking the market goes long here and other people are going really heavy on puts, then you've got to delta hedge that. And so a lot of the market makers might be going long or might be going short. So maybe those kind of trades are offsetting. But when you get to expiration, were these shorter dated puts, Emmett?
I don't recall the specifics, but I think it was like monthly or puts or something, just quarterly or monthly, probably the popular, not like weekly, I would imagine.
Yeah.
So
I mean, it seems like if the market even just stays flat and all those puts expire, then like that alone would create upward pressure in the market. So
yeah,
I don't know. It could be a really interesting volatile month ahead of us.
Yeah.
Or we could be wrong and maybe the market goes down from here.
Yeah, it's not investment advice.
Of course it's
People who
possible.
go long here, what if the market, whatever, all the puts or buyers are right and the market crashes, 20% again. So I don't know. So, but there's no risk, no reward. That's what they say, right? And this feels like a risk opportune time to me. So Tesla, let's move on to Tesla. Everyone listens to us for Tesla. We've talked a lot about this stuff. Is there anything else macro you want to touch on, or can we just?
No, I think we've gone on long enough about there, but it's probably the first time in a long time that I'm actually feeling pretty optimistic about macro. The economy has actually weathered this storm better than I thought it would. And so, if inflation gets tamed a little bit and there's not too much kind of like collateral damage to the economy, then we might be okay. I still think there is a pretty significant risk of a recession, but from where we are today, the economic data seems like it's reasonably strong.
Yeah. So Tesla, the big news is the China weekly insurance numbers. That's the big latest news. I mean, there's other big news, but the latest news, I think, is the insurance numbers, right? And that came in at like 17,000 or something,
17,000 and change. I think it was, I wish I had it up. I think it was about 12,000 last week, which was a little bit weak. It was, stronger than it had been the week prior. But, I, for one, had been pretty concerned about, demand in China. We talked last week, I think, about, Tom Zhu's comments about demand being so strong in China, seeming to be at odds with the weekly registration data. But now with this data point, it seems like Model 3 in particular, I think was up like 100% week over week.
So the price cuts
So
are really taking effect now. Basically, people
yeah,
getting deliveries. Yeah.
that seems to be the case. And then, the other thing is, obviously there was the shutdown for Chinese New Year, but then there was another shutdown for Spring Festival in February. So you actually had like a pretty sustained period of shutdowns. And, um, are we free to talk about the email that you sent to our friend, by the way? I'm not sure if we want to
Yeah.
talk out of school.
We can. Well, we have some contacts on the ground in mainland China that we find are reputable, and we asked them for some, not talking points, but just like opinions on like what's the China economy like there? Is Tesla weak? And the gist was that like the other automakers, the competitors, are really in trouble, but Tesla's in good position.
Yeah.
And that last month was festival, and the first time in like 3 years where mainland Chinese people were free to travel as they wanted and go visit their homes or whatever. So there's a lot less people in showrooms, and orders and
Yeah.
deliveries taking place last month. So that's potentially why delivery seemed not as strong as otherwise for February, right?
Yeah, yeah. I think maybe the piece that I had missed when I was thinking about China previously was like I thought about the festival and Chinese New Year as impacting production, but also that there's just people who have been working or haven't been traveling for the last 3 years because of all these COVID restrictions and concerns. Like they're finally home with their families, and so they had an extended Spring Festival and Chinese New Year.
Yeah.
And so like showroom traffic just in general has been down. So what we saw with this week's data is that pretty much all the Chinese automakers were down, but Tesla was actually up. I think it was like 11, 12%, something like that, week over week. Maybe it was even, I think it was actually higher than that. I think the Model Y was up about that much, but the overall number was a lot higher. So,
Yeah.
so if that is actually true, then demand for the Teslas is relatively a lot stronger than the other brands, which didn't seem to be the case. I mean, with the other data points that we had so far this year, BYD was looking like the like the 25 or 500-pound gorilla in the room. And so for Tesla to actually start taking a little bit of share this week was, I think, a really good sign.
Yeah, and there's like reports of potential shenanigans that I haven't seen dispelled with BYD in terms of like double counting its sales numbers. Did you see that? Like they sell to like some
No, I didn't see
dealers who
that.
then resell it to consumers so they can double count the sales or something. So there was some weird potential shenanigans going on with BID I saw being tweeted about that I hadn't seen dispelled by anyone. But there's not really a huge BYD bull, audience on Twitter, actively dispelling things like the BYD Tesla partnership that was rumored to be soured, just
Yeah.
24 hours ago. Then Elon had to dispel it. So you don't know. You got to take everything with a grain of salt, negative or positive on BYD. What you hear, I guess. So
Yeah. Taylor Rogan was the BYD fan, but I haven't been following him too closely lately, to be honest with
no,
you.
no. Um, so I mean, I think if you had to guess, like, well, next week maybe we'll go into more projections of what we think the quarter might be. But I mean, what do you think for deliveries for? My over under. What's your over under? Your 50-50 over under for Tesla deliveries globally? For we're only like 2 weeks away, a little more than 2 weeks away from the
Yeah.
end of the month. So what are you
Yeah,
thinking?
I mean, last week I probably would have said maybe like 410 or something because I was just very concerned about everything. But I'd,
Hmm.
I'd I'd probably say 425 right now seems like a reasonable number.
Okay.
And I think they could actually even beat that. If they've got a strong, yeah, if they actually have something of a wave, which it looks like they might. But the other thing we hadn't touched on is the European inventory numbers have been really steadily down for a while, and those have been elevated and seemed like they weren't going anywhere. So the fact that we're in the final month of the quarter and then those European inventories are finally starting to really get soaked up, that's really good news in my mind as well. um,
Yeah.
so yeah, I think 425 is probably my over under. That's where I'd set the line. Where are you right now?
I'd say 430 is my over under. I just saw in the comments, and I'm seeing in Twitter, Twitter's the best place, is that there was a US drone just struck a Russian airplane this morning. Um, and
Oh, good.
yeah, so the market's, I guess, getting wind of this right now. And that's why we're seeing a little bit of a tank in everything at the moment as we're talking. If I was a day trader, I'd be like shorting things right now. But, it's a little scary. If the Russia US start fighting directly because of some accident like this. Like that's not good. That's why the market's panicking here. So
My hope is that this is like the Silicon Valley Bank of the geopolitical world. It's like the one accident that forces everybody to be like, stop, okay, like let's
yeah,
back off from this.
it
So
didn't crash the plane apparently, or maybe it did. I'm seeing that the Russian Su-27 suffered unknown damage and landed at an airbase in Crimea. So it landed. It can't be that bad, hopefully, but this is not good. I mean, we gotta. This is the escalation, the accidental escalation of a U.S.-Russia direct, global World War III against each other that I think everyone's afraid of. This is the elephant in the room, and I just can't wait. This new election cycle can't come fast enough where candidates will have to talk about this, and they'll know that the voters do not want this war to be escalated. They want peace. There's still some people that want to put their foot on the neck of Russia and just do everything, throw everything militarily at them. But I think the majority of the American people just want peace and don't want this war to go on and want peace to be negotiated. So in this new election cycle, it needs to come sooner because that's when we can get, mainstream media to talk more about it, and politicians will have to talk more about it to stay in favor with whatever voting contingent they're trying to get. So,
yeah, and I think public sentiment is really against any kind of like further intervention or escalation in Ukraine.
Yeah.
So I think it'd be hard to, push for, a more aggressive position here, even if, that's what the, military industrial complex wants.
Yeah. So this early reporting is conflicting. The market seems to believe it enough to tank, quick, 1% in like 5 minutes. That usually doesn't happen unless there's some kind of new big macro market news going on that everyone's, talking about. So, yeah. Apparently, NATO's talking about it too. So there is something to it. We just don't know the full story yet. Anyway, hopefully next week we could be talking about Russia, U.S. fighting instead of Silicon Valley bank collapse. So it could be a whole new macro market discussion.
Oh,
We'll
I sincerely hope not.
Yeah. Whatever. Yeah. All right. Anything else with Tesla? Should we go to Q&A? Anything else you want to touch on there?
No, so I did upgrade my internet. I saw several comments. Melody from YouTube said that I look really good, but then she amended that to clear, not good. And Farzad noted how the new internet really highlighted just how ugly I am. So I'm glad the internet is working better for the video on YouTube. But apologies that results in everyone seeing my face a little bit more clearly.
Oh, I think it's good.
It was getting bad, so I'm glad we finally fixed that issue.
Yeah. All right, let's go to Q&A here. So yeah, anyone we'll ask the questions here, and if anyone questions, they can certainly type them in, and we'll go to them as many as we can. I guess the next 10 minutes we kind of went on for a while on all the other stuff. So just type in your questions, and we'll get to them right away. So wasn't Rocket, from Martin Muldoon in the YouTube comments, wasn't Rocket Lab supposed to have 2 launches this week? One is not on the radar anymore.
I think one was postponed due to weather in Virginia, if I'm not mistaken. So I don't think that was a huge surprise. But yeah, I mean, Martin's been on top of this. The launch cadence is not, I think, what we had been hoping it would be this year for Rocket Lab. So hopefully they'll get that turned around. I'm not sure that it was rescheduled either. So
did you see the relativity space attempt? Did you watch?
Yeah.
Did you keep up with that? Yeah.
So I watched it. They got to like a minute and then they scrubbed it. Well, at first
Didn't they try again a few days later? Didn't they try again a few days later and scrub it again, or did I see someone's just like YouTube report of it that said?
I only saw the one. I think it was like last Thursday. Maybe it was even Friday.
Yeah.
I didn't see it after that. I think that was their only launch window. I think their next launch window is like 2 or 3 weeks, if I'm not mistaken. I think it was like toward the end of March. So,
okay.
Yeah, we'll see. I mean, but that's another, they had an issue. I think it was with their, what did they say? It was like with their O2 something. So like there was some parameter that wasn't quite right when they were about a minute out from launch. So they had to, put it on hold, and then they eventually scrubbed it. So,
Oh, Nick's Corner. I like Nick, by the way. He's on, I think he's on Farzad's channel sometimes. Nick is saying there's 2 scrub attempts, one last week and one on Saturday. Yeah, that's what I thought. There was one on Saturday too, I thought, that was scrubbed twice. This is the space, what Chamath says is the next space competitor to SpaceX, which Matt and I wildly disagree with, that Rocket Lab is the next competitor to SpaceX. And Chamath doesn't even seem to recognize Rocket Lab as existing or
Yeah.
something.
He's very focused on energy right now. I don't think he really understands what's going on in the space sector. I mean, he was
Yeah.
pushing Virgin Galactic, and like that whole
Oh,
business
yeah.
model is just, I could be wrong here, but that business model just looks like total crap to me. I don't
Yeah.
I don't
Well,
think that
in
has any chance
retrospect,
of
it
scaling.
does. I mean, I could see how like 3 or 4 years ago, someone might have thought Virgin Galactic's going to be at the forefront, but they, they're not innovating in any way where they can send rocket, they can send things to lower Earth orbit in any way, shape, or form. So yeah, I think, and it's easy to say now
It's
for sure that
it's
it's
like
like,
a more expensive tourist thing that already has one fatality on their books, and
yeah,
it's just like a rickety piece of like it seems to me it's like what they were doing in like the 1950s when they were testing these supersonic jets at high altitude. It's like, yeah, those were like amazing machines that failed a lot and were like dangerous. You want something that's a little bit less exciting if you're going to do space tourism, honestly, and frankly one that gets into low Earth orbit, not just where you can see the curvature of the Earth. So I can get off my
yeah.
soapbox about that, but to me that their whole
Okay.
model just doesn't make any sense.
Okay. Let's go to the next question here. From Carl Branco on YouTube, is it a stretch to believe tier one institutions are not well suited for unicorn startups in Silicon Valley and elsewhere, or more likely VCs got special perks for driving the massive SVB deal flows? I don't think that's a stretch. I think tier one institutions like JP Morgan and Citibank or Bank of America, they are not good for small businesses in my experience, especially startups or anything crypto related, for example. They're just super overzealous on regulations. They're super regulated, out the wazoo. So like anything with the word crypto in it, they stay away from. I feel like their compliance people are, crazy and so all that stuff flows to the regional banks, which are more, not, I wouldn't say more lenient, they're just more realistic and not super crazy with compliance regulatory stuff. So I would say for that reason, you have a lot of the VCs working, having good relationships with the regional banks. When you get to a certain size, like $1 billion company, unicorn, then maybe you can go, to the bigger banks. But anything, that's not, gigantic in size already, I feel is probably going to bank with Silicon Valley Bank or First Republic or, some of these regional banks. I don't know, Matt, you have any thoughts on this?
Yeah, I'm kind of on your page about this. I mean, I think there's not like the special perks that they're talking about. I think part of that was like maybe the access to the like the venture debt part of the business, which they probably shouldn't have been doing in the first place, to be honest
No,
with you.
they shouldn't have.
So like that part of it, like let's just get rid of that. But I think the broader question is like, is there a place for these regional banks? And I think there absolutely is. And just from maybe I can just share like an anecdote or two from my own experience on the energy side. So I was managing this large wind farm in Ohio, and we used one of the large tier ones. And it was like every time I had to do anything with the banks, or like we had like a special situation, um, I'd be like, hey, like, can we just like do this? And they would like insist on like getting legal counsel and like writing an amendment. And it was just like a huge pain for things that were truly like a non-issue, but they just like were really, it was like a CYA attitude. But then I was working with another smaller power plant out of North Carolina, and we're using a regional bank there. And we had a like situation one year when I was there where like we had the plant was down for a lot longer than expected and had a lot like higher operating expenses and maintenance expenses to replace some issues. But they were able to like put a line of credit in place relatively easily because we had this long-standing relationship with these bankers, and they kind of understood how unusual this was, and we can just talk to them and go and sit in their office, and it was just kind of like night and day, the kind of service and the understanding and like the relationships between these regional banks and then like the large ones where you're just like this anonymous client that, like all they care about is making sure that you don't risk up their portfolio. So yeah, I think there's absolutely a place in the economy for these regional banks. And I think I hope this doesn't cause too much damage within that space.
Yeah. Next question comes from Harry Chu in YouTube comments. Question: Musk says demand is a function of price. What price do you expect for Cybertruck in 2023-24? And thoughts on Cybertruck demand? Matthew Donegan Ryan is like a new on the scene. I'm going to call him the Cybertruck Whisperer. I think that's his.
And the Tom Zhu whisperer too.
Yeah, Tom Zhu. Yeah, he's got a lot of. He talked to Tom Zhu, but instead of like what's the guy, the dog whisperer, that channel? He coined that term.
Oh
Well,
yeah.
I'm gonna
I love that show.
Matthew Donegan Ryan the Cybertruck Whisperer, because he understands pickup trucks. He's driven like 5 F-150 Raptors. He used to work at a Ford dealership for a few years,
yeah.
selling F-150s for several years. So he understands the market. He's had 13 Teslas. I mean, that's a lot. This guy's had more Teslas than me. I didn't know anyone had more. I was counting them in my head the other day. It's like I had 7 Teslas over the last 10 years. I've rotated in and out. So he's had more than me. So he understands the pickup truck market. He understands Tesla very well. He has a new channel on the scene, and he's going over Cybertruck stuff. He was at the Investor Day, and if you haven't listened to his findings on the Cybertruck, or is just what he's found out about it, you should. He's got great. And for the pricing, I think he suggested it, what he thinks likely the pricing to be. I can't remember offhand. I think it was like 59,000 starting price, up to 79,000 for like the tri motor, so that's still within the 80,000 price mark for the IRA subsidies. So I think that seems about right. Maybe a 59,000 starting price now. I think it used to be 39,000 starting price, but inflation and the other competitor F-150s and all the other competitor pickup trucks have all gone up like 10 or 20,000 in starting prices since then, 3 years ago too. So it would make sense for the Cybertruck to go up to like 59,000 as a starting price for the base model, which will be a dual motor. So yeah, that seems to be what I think the starting price will be.
What do you think about demand? Are you in the
Oh,
in the Adam Jonas camp that 50,000 a year is a good target for Cybertruck?
yeah. I mean, I think that's way off. I mean, that guy, Adam Jonas, and I saw Drew Dixon tweet like, "Oh, even when the biggest bulls start saying negative things, you have to pay attention." Adam Jonas is not the biggest bull. No way. He's the biggest flip flopper. He's the biggest flip flopper.
He's like the fair weather fan. He's hilarious. And he's always like off the mark. It's like he's like focused on some very tangential part of Tesla's business. Like I remember a couple of years ago, he's talking about like how they're going to put Starlinks on all the Tesla cars, and that's going to
happen.
Enable
that
connectivity.
Happen, though, I think.
But it's like it was not at all relevant to Tesla's valuation. So why he was focusing on it in 2020 it just made no sense.
That's the one feature I wish someone asked Franz and Tom Zhu or some of the people at the Investor Day: is Starlink going to be integrated into the Cybertruck or other Tesla cars anytime soon? I haven't heard anyone say if they've asked Tesla management about that.
I maybe disagree with you, and we'll get back to the core of the question in a second. But given what is it, T-Mobile that's their partner now with like the cell, like couldn't they just do what T-Mobile does and like use some like iPhone type connection to access Starlink, and a lot cheaper than actually having like a dish on your truck?
Yeah, I think they could use the same technology, but this technology, my understanding is it takes a unique type of signaling from only certain satellites that have the capability and space to provide that signaling. And right now the capacity is very low. So it can only be used once in a while. And it's really, not sporadically. It can't be used by like hundreds of thousands of people at once, for example. It's really meant for like emergency use case only. If you're stuck in the wilderness or something, then those people can turn it on and use it. And it's not like the data flow is not as strong. It's more for like texting and not really for like voice calls or anything like that, for example. So that's my understanding. Is sort of like rudimentary so far, but it seems like it could grow to be something more substantial to me. I would but maybe there's some hard limitation where it's never going to get beyond that type of use case. I'm not sure. So
Yeah. Back to the question, where do you think demand ends up? Like once they're ramped, I don't know, call it 2026 or something like that. How many Cybertrucks a year do you think they're doing?
over a million
A
globally.
million. Okay.
Yeah, probably 500,000 at least in the US. Um, Maybe even up to a million in the US, but somewhere in that range. But I think globally over a million, between 1 and 1.5 million globally is my guess. Maybe it's
Didn't
2027. Maybe 2027 will be ramped up to then. But they'll ramp up to that capacity to a million plus for sure in the Cybertruck per year, in my mind.
didn't didn't Matthew say that there weren't plans to go international with it right now in one of his videos?
He might have, but and that's probably the plan initially because it's going to take a few years to ramp up just to the U.S.
Yeah, that's
demand,
true.
right? But at
They
some
got
point, when they
500,000 orders they need to work through.
yeah, or they have over a million orders right now, but maybe half of them take delivery in the U.S.
Yeah.
or whatever. So, yeah, I mean the U.S. and Canada, and then you have Central America. So um, I think once they get, 500,000 plus in North America, then I think they have plans to expand internationally. There's like a cult of people in China that want the Cybertruck. I think we talked about that with our contact on the ground in China.
Yeah.
There's people all over the world that want the Cybertruck. It's not just the U.S.
I
So
saw a Hummer on the road in China, probably '07, and
mhm.
it was like the most jarring thing. It was like this person clearly wants and is getting attention because there's all these little small cars and then this
Yeah,
like
yeah, yeah,
beast of a vehicle, and it's like
yeah,
hard to park anywhere. But
yeah.
it's like, yeah, that's I
It could
could
become a
see,
status symbol because it's such a
yeah,
different form factor that you might have like really wealthy people in Hong Kong or China or Middle East or Europe, even. I don't know. But you might have really wealthy people buy it in North America and ship it to their country and make it like almost like it'll be very expensive to do that. And then, you have to get past whatever road regulation to make sure, you're allowed to do that legally in that jurisdiction. But I could see that happening. It would be like expensive to do, but I could see some amount of people doing that.
yeah.
So, all right, let's go to the next question from Matthew Herges on the YouTube comments. Does Peter Teel have any SEC exposure for being vocal about pulling money out of SVP? I don't, out of Silicon Valley Bank. I don't think he should, but there are calls. We were talking about earlier in the stream how there's some like journalists out there or people like, in social. Some people are saying that the people who were advocating for, taking their money out of Silicon Valley Bank, should publicly should be looked at closely by the SEC, whatever that means. Like, should be fined or something. Make sure they're not short Silicon Valley Bank. Maybe that's a legitimate concern. Maybe you have to look at their statements and see if they like shorted a crap load of Silicon Valley Bank. Because I did put a tweet out like, is Peter Thiel short Silicon Valley Bank? I wonder if he is, because he was long that marijuana company. I remember that went up like crazy with the short squeeze. But I don't know if Silicon Valley Bank, if he had a personal position or not, or if it's just like his own fund and founders that he works with.
Yeah, I mean, assuming he's not short, there's nothing to see here. I mean, he's essentially acting as like a steward for all of his portfolio companies and frankly just friends who
Yeah.
had a lot to lose. That is absolutely like the prudent thing to do. And you even heard the guys on the All In pod were telling all their portfolio companies to do the same. It's like that. It's exactly the prisoner's dilemma. Like if you don't do that, then you're going to be the one holding the bag if things go sideways. So the best thing to
Yeah.
do, for your own interest, is to get your money out of there until the storm is
Yeah.
past. But
Yeah.
if they are short, like if Peter Thiel was short and then he was like, creating a ruckus about that, maybe there's something to see there. I kind of sense, I'm not a securities lawyer, but I kind of sense even then there's probably nothing nefarious. It's not like
Yeah.
he was spreading misinformation or anything like that. So to me, this seems like almost certainly a non-issue, but granted, there could be holes in my knowledge base.
Yeah, I mean, and there's also a difference whether he was short like before he started calling for versus like if someone shorted the stock after they realized the stock that and they told everyone like, publicly they think and then they short it later just trying to make money. That's, I think, different than shorting it like pre-planning to like cause a panic. I feel like then that could be
Yeah.
That
I
would be
don't even
worse.
think that's illegal though, is it? Because like,
I don't
I
think it
mean, isn't
is
that
either.
essentially what the Hindenburg research does? Like they're very
Yeah,
short all their stuff, and they know every time they
that's
publish a
true.
report, it's going to cause a stock decline. And that's
Yeah.
like you can say that's a little sleazy, maybe, but it's not illegal. I'm pretty sure.
Yeah, yeah, that's true. Yeah. So let's do maybe one more question, maybe one or two more questions. Let's do here from Stu on YouTube. Doesn't the U.S. government own Silicon Valley Bank now? Should we just nationalize banks that fail if we are providing 100% insurance? Yeah, I'm not sure what the ownership structure, if they're auctioning it off. I'm not sure how this is going to work out. I have to study up on that. I mean, I know the U.S. government, sort of bailed them out. They didn't bail out the shareholders or the bondholders of Silicon Valley Bank. So it's not really a bailout per se. It's more like they're they're backstopping the deposits. So I think the U.S. government should backstop deposits for all, banking depositors for sure. I don't think they should, nationalized banks. I'm not sure that could mean a lot of different things, I guess. Um, so what do you think, Matt?
Yeah, I mean, I think the crux of this question is, are we socializing losses but then privatizing the gains? And I haven't looked into the details of this explicitly, but I did see with Secretary Yellen's statement on Sunday night that the U.S. government was not on the hook for any losses whatsoever with this depositor insurance. I'm not
Mhm.
sure exactly what the structure would be that would enable that to be true. But I know, like, with TARP, for example, there was more kind of risk that the government was taking, but they ended up making a profit on it. So it's like same thing with the GM bailout. The government made a profit on it. A couple of these other things that appear to have gone well, or like appear like they're a bad thing that like the taxpayers are kind of on the hook for. In a lot of cases, it ends up working okay, actually.
Yeah.
So yeah, I'm not too worried about this, to be honest with you. I agree with what you said, Emmett. Like we should not be bailing out the shareholders for sure. Like I think there's no problem at all letting like the entity die. I know they are
Yeah.
still looking at auctioning off the actual entity itself, though. I think like the UK branch was sold to somebody for like one pound. So
Yeah. Yeah.
yeah, we'll see where this ends up.
Yeah.
This story's not over yet, but to me, this is not like, even if we ended up taking like a $10 billion loss as taxpayers or something like that. In my mind, that's both unlikely and a small price to pay for kind of avoiding contagion.
Yeah. And let's do one more question I see from Ali Shekhabai. I'm not sure I'm pronouncing the name on YouTube comments. Question is any thoughts on NHTSA investigation? Do you think they can suspend it and how it can impact Tesla stock? So this is something we've touched on a few times now, right? One thing we didn't touch on, actually, we should have touched on our Tesla notes, is the new full self-driving
Yeah.
11 version
How
that
did we miss that?
all the beta testers have gotten. I think they got it all like Thursday, like the day or Wednesday or Thursday last week, the day after. So it's been like a week since they've had it almost. So, but it is new since our last live stream for sure, and the reviews have all been very positive. I've watched a number of videos on YouTube. It's like, instead of watching just the latest Netflix series, I like to watch the latest test drives by the beta testers of the newest versions of Tesla, of the Tesla full self-driving beta, and this one seems really good. I mean, it's not perfect yet, but it's much more close to perfect than it was in the past. And even the biggest critics of FSD beta, those testers are raving about it. So
Yeah.
part of me want, like, the negative Nancy side of me is like, well, they're probably all just overexcited because it's been like 6 months since they've had an update, so they're just like harping on. But that's not necessarily true, because a lot of these people have been very critical of new updates, even when it's been a long time since they've received an update. I remember in the past, a lot of them would like poo some of these updates, being like, oh, now I'm having problems here and there. But I haven't seen any of that, really. Have you?
No, I mean, it's not perfect. I mean, I've been watching enough of the videos to say like there were some people who were like V11 is going to blow everyone's mind and it's going to be like 2 months of robo taxis or something like
Yeah.
that. It's definitely not that drastic of a step change. But what I think is really encouraging is for how massive of a change to the software this is.
Hmm.
The actual performance seems like it's probably like a couple steps forward, and I was almost expecting like a couple steps backward, but maybe the rate of iteration increases from here. So yeah, like Lisa Tesla Truth, I think she's something like that is her handle, and she's been very critical of Tesla's FSD, of like just saying it's way worse than people think it is, and ragging on like the Omars of the world who are talk about how great it is. And she put out a tweet, I think over the weekend. It was like, Tesla's gonna, if they want this version back, they're gonna have to like claw it out of my cold dead hands. It was something to that effect. So for
Yeah.
someone who's been so critical to say like this is like such a positive improvement, I think is a very good sign. Yeah, and I've seen a lot of the videos too where it like handles very complicated situations, right? I know Dirty Tesla, he had one where like a guy kind of like shot out very quickly in front of like some parked cars, and it just like hit the brakes very fast. So yeah, I think it's better than I thought it would be, to be honest with you. And once it goes into wide release, I have a feeling we'll see a increased kind of rate of iteration from here. So
Yeah. Yeah. I
that's what
hope
I'm more
so.
excited about, is the rate of iteration, not necessarily just the kind of current state of it.
Yeah, me too. Yeah, I mean, some point this year, I really feel like the FSD beta tipping point happens where it's not going to be like level 5 suddenly, but it'll be so good that it'll pass the wife test, and like lots of people just want it and will pay up for that option. Instead of 10% right now in the US, maybe it'll be like 20%, then 30% the quarter after, then 40% of new buyers the quarter after. So we'll see. I think some point this year we'll see the tipping point in that, where word
Yeah.
gets out and people more are willing to pay up to adopt it and take it on. So
Yeah, and that's like that's what gives me so much confidence about this, investment in the long term, is that eventually that's going to happen. But like
yeah,
for modeling purposes, we basically assume that that never happens, and we're still
yeah.
saying that like
And what
there's
is
a
it
lot of upside.
in the US right now? It's like what, 10% or 8% or 6%? What are
I think
we
it's like
estimating?
14 or something like that.
Oh,
But then global,
14%. Okay.
I could be wrong on that,
In
but
the
it's definitely
US.
higher in the US. And then I think the global average is more like 8 or 9.
Yeah.
Um,
Well, they haven't turned it on in Europe or Asia yet, so people are just like buying a hope and a dream right now in those places. So I don't
yeah.
blame it being so low everywhere else. But in the US is the real, I feel like, temperature to take on that, how successful it's becoming and passing that quote unquote wife test. So
Yeah, I feel like it's getting closer. I mean, I had an hour-long drive over the weekend, and it, was just it handled all these roundabouts perfectly, and it was just such a relaxing drive to not have to worry about
yeah.
the navigation. I was going to a place I wasn't very familiar with, and it's like I think once in a when it gets to the point where it passes the wife test, I think the
Yeah.
natural thing for them to do then is to give like a 30-day free trial or something like that
Yeah.
to
Yeah.
everybody. And then
Yeah.
that will have like a huge impact on like fleet wide take rate, I think, because even
Yeah.
if, only 10% of the existing fleet at that point, like opts to subscribe, well, at 10% of 4 million, that's, still 400,000 monthly subscribers at $200 a
Yeah.
month or something. Like it's that there's a huge amount of potential here. And so I think whenever we get to the point where it seems like we kind of hit that inflection of passing the wife test, I think that's going to be very, very good news for the company's
Yeah.
financials. Maybe 6 months
Passing the
after
wife
that.
test and the not driving like a jerk test. Yeah.
Yeah.
So those are the two things. Yeah. I think it's safe. It's very safe. I'm
Yep.
very impressed with the safety statistics, but it just has to pass the wife test and not drive like a jerk test. Those are the two tests it has to pass now. Yeah.
Yeah. Yeah. And I've gotten to the point where I just hit the accelerator a lot because I know
Yeah.
I
Me
can
too.
predict
Especially at
when
like
it's going to be. Yeah.
yeah.
And I'm like, I
Especially
don't
at
want
stop
to like,
signs or
yeah,
intersections.
exactly. And, just avoid being a jerk. And like, that's all you have to do. And it's such a
Yeah.
better driving experience. So,
Yeah. Yeah. All right. Well, we'll leave it there. It's been an hour and 15 minutes. We went over a little longer than usual, but a great chat, Matt, as usual. And we'll be on next week. Hopefully, there won't be any new crisis we have to talk about too long. Hopefully, we'll talk about the Fed, pausing rates and as opposed to raising them still. And maybe Tesla will be, back on the move up again. Who knows? So,
yeah, that would be good.
yeah.
Definitely looking forward to a little turnaround here. It would be welcome news for sure.
Yeah. And hey, by the way, Rocket Lab is and I mean, not Rocket Lab, Roblox is within $10 of its 52-week high. It feels like striking distance.
All right. That's
Yeah.
that's pretty good
Yeah.
accomplishment.
Yeah. I mean, it's 52 high, it's 53, but its all-time high was like 130. So it's got a while to get to there, but it feels
For
like,
our portfolio companies, that's that's a good
yeah.
sign.
Yeah.
A
Yeah.
relative winner.
Yeah. Absolutely. All right, guys. We'll see you next week.